Hi guys, welcome to the channel. It's quite early. I've just finished my trading session with my guys, but I wanted to shoot out this video because I recorded some of the setups there, not in hindsight, again, as they play out. And I think this video is going to be valuable because you're going to really get belief and confidence in your trading because of a few things. One, the patterns that are there and the hundreds of different ways that you can make money. Two, what trading actually is and what it boils down to that's going to make you a successful trader. And three, a real demonstration of the power of this stuff, and it's over to you to just be disciplined enough to execute this plan. So check out the setups. There's a trade that I show. There's a couple of trade setups that I show you guys. There's one that I take and it plays out during the session, and I think it'll be valuable. Let me know if it is valuable in the comments, and I'll do more like this. It's kind of off the cuff. I'm off to the gym now, so yeah, enjoy. News out this morning, and you're looking at our prediction of the breakout setup on the pound dollar. This was a dip down and rally, so absolute textbook compression. In fact, over the last couple of months, I've shown you guys a lot of these compression breakout setups, and here's just another one. Pound Aussie skyrocketed. If you caught that day trade, again, don't be greedy with targets. This was the previous structure on the major time frame. You drop down to the day trading time frame. You saw your divergence on the RSI, overbought condition, conventionally overbought, not by my standards. We had equal tests of high on the price, had this retest, divergence on the second test, a fall over. Where did we come down to? Optimal target price would be previous structure resistance becomes support. Left a little bit of money on the table. This is a fake out. And then away it goes. So you caught the money. These quick moves. This is what you want as traders. You don't want to be greedy. Don't want to shoot for the moon. You just want to get in and out. Here's some deceleration for you on the 15. Right. So this is interesting. Let's remove all these. Initially, as a day trader, I would look at this and I would say, that's an interesting pattern. Right? And it all starts with, this is a pattern I see frequently. When do I see this pattern frequently? Whenever we've seen a big run. And I know that this doesn't go on forever. And guess what? RSI massively overbought. We're up at 82.8, nearly 83. Big spike to the upside. So we've got ascending channel, RSI overbought. Let's go out to the 60 and see where we're approaching. Well, would you look at that? Major level of resistance. Okay, not quite as high as I would like, but we're still pushing. So you got a couple of options. You either wait until we push up into that zone and hope that this ascending channel is still relevant, or you look on the 15 and you say, well, we're close. Is there a move that I could catch sooner? Some of you trade on the 5-minute chart, right? On 5-minute chart, you've got, as a day trader, you've got plenty of options. You've got the ascending channel. You've got a retest. So you've got this double top here with divergence on the RSI. This literally would be where you could go, okay, well, I'm going to enter with knowing that I could be wrong, but I've got to be willing to be wrong and get in again if we then approach this major zone. But we're close enough, and I think that there's a high probability set up here for a day trade that I don't want to miss out on. So I'm going to, this meets my rules. I'm going to take the thing, and my stop loss is going to go in ATR above the high. So if we're at 53, stop loss at 199.62. Okay, and then your target, ascending channel wise, it goes at the start of the channel. So that will give you probably a 1.5, 2 to 1. If you're a bit more aggressive, you go, to structure. But as a day trader, I wouldn't recommend that. I'd recommend just a quick, 199, start of the channel, 199.30. There you go. So if you bring on your reward to risk profile here, about 1.5 to 1. Yeah, very typical of an ascending channel. If you're using the double top as the entry into the double channel, that's into the ascending channel, great. That's very common. Or If you're just using a double top entry, you might have a different method for taking targets. It might be based off of a 382, right? So that's a common, you get the flagpole 382, so you're now down here, right? Which is pretty much the start of the channel as well. So it's kind of a, you can pick somewhere in between. So this would be the ultra conservative. Somewhere in between would be mid conservative to aggressive, and then this would be more aggressive. And then ultra aggressive would be down at higher time frame structure, right? So you go out to the 15 or the 60, and you'd be looking at this level here for targets. Or you could trail stops down to that, right? Or you could split your position down to that. So you say, well, target one's here, target two is here. All of a sudden, you've got a very, very attractive counter move there. But you've got to be willing to be stopped out and get in again if that's your play. If you're looking at this area, you know, we're still not quite in there. So from a day trading perspective, you're taking the first shot. But from an intraday, more swing trade perspective, you really want to be up in this zone here. And I don't think that's a bad level at all. If you come into the markets as a professional and you identify setups that and patterns that happen frequently in the market, and then you go and build some rules around that because you know how it behaves or how it's likely to behave more often than not, and then you go and do some testing to verify historical data confirms that your rules that you've set out would provide you with a profitable edge over time going forward based on historic results. And then you go and test it in the real markets and you say, well, you know, over time, this has done this. And when we hit this level of resistance on the major time frame and we see this pattern and RSI is over a certain level and price starts to behave this way, I know that if I put an average true range stop here and a target here, this happens. And if I just do that over and over again and I don't get tempted by lower quality setups that I don't know the outcome of and I haven't got tested and verified, then I'm not going to take them. And I'm only going to stay in high quality setups like this and stay out of low quality setups that I don't know the outcome of. And I'm going to have the discipline to do that. And that entire approach is what will allow you to come away with consistent profits and be a professional trader rather than a gambler.